Bitcoin has done the pattern that I was hoping we wouldn't see, which makes it likely we're going to see lower lows, maybe in the 30,000 to 29,000 range. We're going to see exactly why in an objective manner. But then we're also going to look at Arweave. We did a video not that long ago. It's doing a textbook ABC correction. We're going to look at that and see what is the higher probability setup for the upside, which also gives us an indication on how low Bitcoin is going to go because Arweave is a high cap. So if you like today's content, like, subscribe, hit the bell notification. If you don't mind, know me by now. My name is Jiggy. I'm the award-winning author of The Extraordinary Venture Capital Opportunity, How to Invest Like a Pro, being featured in the best-selling book, High Probability Trading Strategies, back in 2008, where I only used to focus on currencies, but now exclusive on crypto. So let's dive straight in. All right, Bitcoin. All right, the fact of the matter is we need to be market neutral. We just need to look at what we're seeing, and we've got this movement to the downside, and we thought this may be the end and a nice reversal to the upside, which we had a nice movement to the upside, but it turned out to be an A, B, C correction because this low over here is trading into this range over here, which invalidates the movement to the upside. So we should, just going by textbook Elliott Wave and Fibonacci ratios, that we should see this range. So what we're going to do here, I'm going to zoom out very quickly. Zoom, 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 out, out, out. All right. So this is what we're looking at as a whole market. So the macro thesis still stands, which is a potential wave 4 is being formed of some degree, and that we should anticipate all-time new highs this year. That hasn't changed, but we might be in for a bit of a storm over the next few days and weeks because of the particular chart pattern that's unfolding. So what I want to look at before we jump into Arweave is a particular end of wave 5. So after you've got this ABC correction, it looks like a wave 4 of some sort. So we're going to count this as a wave 4. And after an ABC, you can do something called an external retracement. I'm going to take you to my Elliott Wave and Fibonacci course, right? If we go to the Fibonacci section, external retracements, I regard as an intermediate level. And what we want to look at is over here, we've got Fibonacci external retracements. We've got the ABC external retracement. So we're going to look at this one in particular, but we're actually going to go for lesson 12, end of wave 5, because that's the one that's really, really relevant for what we're looking at. Again, we're not going to follow the whole lesson. We're just going to look at these ratios. What you typically do with these ratios is, and I cover this in depth in my course, is we're measuring, it's going to be the flip. So just flip this upside down. When you got an A, B, C correction, we're going to measure this movement to the downside, and we're going to project externally these two ratios up here, which is 162% and 127%. These are the two typical ratios for an end of a wave 5, and that's going to coincide more than likely with what we're probably going to see with Bitcoin. It's not what I want to see because it's not healthy for the markets, but it is what it is. And by the way, if you want to learn how to do Elliott Wave and Fibonacci to see these wave structures and patterns so you can see the market as opposed to just seeing random movements, I've actually got an Elliott Wave and Fibonacci masterclass. At the end, you'll be offered to buy my course. It's normally $997, but right now it's £97. I know it's cheap as chips. We're getting phenomenal feedback for the course itself, but it just gives you a comprehensive guide in layman's term on how we can see what we're seeing over here. So what we're going to do over here, well, I've done it already, but I'll do it. I'll just show you what I've done. I've clicked here to here on a retracement tool. I've selected the ratios 1.272, which is the 127%, and then the 1.618. This gives us a ratio, and we're likely going to see a 1, 2, 3, 4, 5 of some degree for Bitcoin, ranging, and we've got two price targets, 32,000 to 29,000. Doesn't mean it's going to happen, just means it's highly probable. So when we take that into consideration with momentum, right, something else that I cover in the course, the momentum is oversold, meaning we should be anticipating sideways to up for the coming 3 to 5 days. 3 to 5 days, give or take. But yeah, hang on, Jiggy, but Bitcoin's looking bearish. Yeah, so what you tend to have is movements of something called a correction, even when movements to the downside are occurring. So what we have, what looks likely, is some type of wave 1, 2, we got this wave 3, we'll probably get a correction, a wave 4, which probably won't trade into the range of 42,000, so it might be like this, and then we should anticipate one final leg at least to the downside coming into this range. So then when we take this as a macro picture to kind of give us context, because sometimes it's people zoom in too much and they get very emotional because there's large market movements. But when we zoom out, what we're potentially looking at is a nice A, B, C correction. Doesn't mean it's guaranteed, it's just what we're looking at for a wave 4, and then we'll reevaluate the market. Another thing we want to take into consideration is the weekly chart. Now, I normally use two indicators. As it's the same indicator, there's two different settings for the indicator. And here they are. I call it the double 8533 and the 13855. Now, what does that mean, Jiggy? Well, one of them is fast and one of them is slow. And ideally, it's best when both are pointing in the same direction. But here we can see the slow is pointing up and the fast is pointing down, which means we should anticipate sideways to down. And then 1, 2, 3, 4 weeks, we will see a reversal. And at that point, we want to reevaluate the pattern and the price to see if there's long positions, or if you're like me and you're using Bitcoin as a macro indicator, that's when we should see more optimism come back into the market. So with Bitcoin, it is what it is. We've traded into the range. Like if I go into an hourly chart, this is what we're looking at the other day. We're like, this is the key range over here. We've clearly traded into that range. That invalidates the wave count of this is not a 1, 2, 3. It's more of an A, B, C. And now we're getting a movement to the downside, and we should anticipate lower lows. Now we're going to look at Arweave. But again, if you're not used to looking at these wave structures, because it can be quite daunting because the price is moving so much, take my free Elliott Wave and Fibonacci Masterclass. It's in the link below. It's absolutely free, but it will give you a high-level flavor of what's in the course. The course, we got a 90% discount right now. You'll get an invite to my private Telegram. We do weekend workshops. We got some other low risk, but very, very rewarding strategies as well that we teach as a hedge, and then we put it all together because we want to increase the probabilities, because ultimately we're playing the game of crypto tennis. And in crypto tennis, there's winners and there's losers, and we want to see if can we win. All right, so we did a video on Arweave. When was it? 6th of February. So was that 2 weeks, just over 2 weeks ago? And we said, is it set to explode? And it looked like, and this is important, more as the lesson that you'll see these patterns unfold time and time again. Well, we're going to go into this in the live chart in a second. It looked like a nice wave A, a wave B, and we look like we're forming a wave C, and we said this zone. So we should anticipate one more leg to the downside as a 1, 2, 3, 4, 5. And then this will become a high probability buying zone. Now, I like it when Bitcoin is looking optimistic when I'm looking at these positions, because it can influence the market. But it also gives us an indication that, there's strong projects out there that are undervalued. And because Arweave is file storage, is a very big deal, decentralized file storage or cloud storage. So now let's just go into a live chart with Arweave over here. So again, we're going to just zoom out. We got this movement to the upside. It looks like a nice wave 1, 2, 3, 4, 5 to form a macro wave 1. And then it looked like, again, I'll just get rid of this indicator for a second. It looked like a nice wave A, B, C over 2. So when we did our last video, it was up here. And we said we should anticipate this last leg down, looking at momentum, looking at pattern, looking at this 5-wave sequence, because wave C's form in a 5-wave sequence. That's important to know. I think I pulled this up over here. Let me just jump into the Elliott Wave section. This is in the course. The course is really comprehensive. We've broken it down. I've done my best to make it really, really simple, really, really easy as possible. But I want to go to the advanced section of the ABCs. Lesson 6, 4 types of ABC correction. The most common is an ABC zigzag. So if I click onto this lesson, I just want to show you the image of it. Again, here, there's a few rules with a wave C. What I want to show you is this, because you'll see this unfold, and when it's clear, it's going to be this part here. A wave C should subdivide into 5 waves. So more often than not, wave C is a 1, 2, 3, 4, 5. More often than not. Whereas a wave A, actually, most people don't know this, can be a 5 or a 3. Here we've drawn it as a 1, 2, 3, 4, 5. But often wave A can sometimes be an ABC as well. I know it is what it is, right? These are the Elliott Wave rules and guidelines. It was figured out over decades and decades, and it applies incredibly well to crypto, the buying and selling psychology of the market. So when we're looking at Arweave now, we're looking at it without those glasses on. I'm looking at it with, we've done these Fibonacci ratios, but really what I want to focus on here is more the lesson is important more than Arweave itself, is that we've got this, what looks like a wave 1, a wave 2, a wave 3. This is where we did the last video, a wave 4, and we said we should anticipate this low getting taken out for a final wave 5, because we want to anticipate and the side of a 5-wave sequence to the downside. What we use as a clue, jump into the weekly chart, that the momentum was bearish overall, but in the oversold zone, but more so that the daily momentum, if I just go back onto this, was also bearish. Like this was pointing down. So I said, okay, we don't need to double guess. We don't need to second guess ourselves. We can just wait for the next bullish reversal and see where the price action is. And if it is in this typical zone over here, this maximum zone, then we can be very on high alert with Arweave if you're trading Arweave. So now we can update this. It's looking like this is the high probability zone over here. We're not there yet, but we're close. So we can be patient with this. We're in the time zone as well. So we can just clean up this chart to get rid of this line. And we can get rid of this line as well. We don't need that right now. For the retracement, it's really this line. So next bullish reversal is the setup. So if Arweave plays out, and again, I'm showing you this more because it applies to all currencies, cryptocurrencies, all markets, all time frames. If it plays out, what you typically get, and again, it gives us confidence to see, even though Bitcoin is king, it's the father, it determines how the market's going to perform and the confidence that comes out of the whole market. But it looks relatively clear that we've got a wave 5, a potential wave 5 of a wave C. If I can zoom in a bit, because I want to do one last thing before we wrap up, of a wave, potential wave 2. Now, if it does end up as a correction over here, everything still stands. We pretty much did all of this before. All these numbers still stand. If this low holds, which is more than likely, we want to see a reversal. Again, it's a higher probability if Bitcoin is looking optimistic. But often these kind of projects, top tier decentralized cloud storage projects, are really under the radar. So when I say powerhouse projects, right? If we just go to CoinMarketCap and we type in Arweave, the ticker symbol is AR, Arweave. I think it's where is it? It's a top 100 cryptocurrencies, 86 position in terms of market cap. It's $24 right now. But what we want to look at is the market cap. So if I click on all, we can see that Arweave at its peak back in, where was it? I think it was November last year, was literally $2.8 billion market cap. Today it's $1.6 billion market cap. So it's a big player. It's a big player and it's doing big things. And I think it was not Novogratz, Andrew Horowitz, their foundation, their fund, they're big on this. They're big on this. I think, in fact, let's just jump into the website. I mean, these are, I'm looking at fundamentals here, but I can't remember if they have it on their website, their investors. We got, Coinbase Ventures, very big deal. I want to take those seriously. Here we go. And Andreessen and Horowitz over here. The reason I bring, these are big boys. These are like, serious guys. These guys here, Coinbase Ventures are very big guys. We're going to be aware that, they've got powerhouse investors and they're looking to do big things. They're going to be a massive competitor to Filecoin and other things as well. So this is really, store data permanently on the blockchain. That's what they're doing. And we want to be aware of that. So let's just wrap up with Arweave. If we do get a wave 1, wave 2, what should we anticipate? And sometimes it's confusing to know these ratios, right? If you're not used to doing Fibonacci Elliott wave, just pop back into the course. I'm just going to show you this because it's handy, especially if you got the course. Just want to make sure you are fully utilizing it. If we go to the advanced section, say advanced is extensions. We go to wave 3, lesson 16, wave 3 extensions. Again, just the key ratios that we want to look at. Here we go. You can see that more often than not, because we're going with probabilities, never certainties, wave 1s and wave 3s have a particular ratio, and the ratio relationship is 1.618 to 2.618, which accounts for 162% to 262%. So when we're looking at price targets, is it worth our time, the upside potential to take the risk? And it is risk, it's always risk, is we can then draw that out with Arweave, literally. And we've done it already. We've measured this wave, what we're calling a potential wave 1, looking at this as an ABC of a wave 2. And then what typically follows is a wave 3. That's what we're anticipating. And the price of a 1.618 is just under $158, $150, should I say. 148 is to be more precise. And then 2.618 is $226, right there. This is the price range of Arweave. Now, if it hits this price, it means the all-time high was, what was it? It was $81. It'll be almost a 2x. So it'll be a $5 billion market cap. So it'll probably come into the top 20 cryptocurrencies if it hits this, depending on how others are obviously performing as well, when the whole market is optimistic. So there you have it. Arweave Bitcoin. It's not the news that I wanted to deliver with Bitcoin, but it is what it is. We need to stay market neutral. We need to know that it's crypto tennis where there's winners and losers, and people are playing against each other, taking profits at different points, buying, and it's speculation that drives the market. So if there's more buying behavior, literally people buying, pressing the buy button and buying, then Bitcoin goes up, especially when the big money is doing that. And the reverse is also true. When people are selling, taking profits, or selling for different reasons, the price is suppressed and goes down. But this is where we can read the markets like a pro. So take my free Arweave and Fibonacci Masterclass. I spent a lot of time going into a lot of detail to make sure you got what you need, but then buy the course. It's only 97 pounds. It's a 90% discount that we're doing at the moment. You know, we just wanted to make it really accessible, especially during these tough market conditions. But then you can upskill yourself. We do weekend workshops, do a few other strategies as well with the private group. We've just launched our Discord channel as well for the private group at the moment. We're just kind of giving more and more value. So if you want to join that group, the way to kind of get access, well, not kind of get access, definitely get access, is the course itself. So like, subscribe, hit the bell notification. Let's finish on a quote. It's going to be chapter 3 today. All right, it's from Confucius. We want some wisdom. We need this wisdom. It does not matter how slowly you go, as long as you do not stop. What I've noticed in my time of coaching individuals, businesses, and working with my own team is that most people overestimate what they can do short term and underestimate what they can do long term. We are in this $1 trillion trend called cryptocurrency and blockchain, and we're at the very beginning, pretty much the very beginning. It's only 12 years young, and over the next 20 years, it's going to change the world more than the internet itself. So now is the time to really focus on the next bull run, 2024, 2025, whilst aiming to leverage where we currently are. But it's to learn, because many of you are brand new, 3 months, 6 months, and, it's a volatile space. If you joined in January, February, March last year, your portfolio would have done amazing gains. If it was April, May, June, July, it would have had massive drawdowns. If it was July, August, September, you probably would have made some good gains. And if it was November, December, January, you're probably drawing down again. And again, I believe there's going to be a point where we're going to see a trend reversal and we'll move towards a 6-figure Bitcoin. Probabilities, never certainties. Keep that in mind. Keep in mind that literally, I remember when it was 2018, beginning of 2018, end of 2017 bull run, the news and the state of the market was we saw a nice correction. We're anticipating higher highs. That was the anticipation, and the optimism felt real, but it went into a long 1-year correction. So we need to also hedge and just know there is real risk. So when I say only risk what you can afford to lose, you have to play out the worst case scenario and make sure you're taking profits, de-risk yourself, like literally money back in your pocket, your exit one, your risk-free of position, and then you can kind of leverage up. But then look at strategies that are not as risky so you can kind of hedge and balance everything out. You can sleep well at night, but look at the long game. This technology is a beautiful technology. It's decreasing the cost of trust by up to 10,000 times because many things no longer need and require that middleman, which is expensive. The middleman is expensive. And if we can cut that out, we can do certain things, and that's the innovation that's happening right now, whether it's the metaverse, whether it's play to earn, whether it's decentralized finance. There's a lot of use cases, but we're at the very, very beginning of this innovation. So now learning how to read this utility and the token price and the psychology of buying and selling is going to be very, very powerful. So do take the free masterclass. I hope you enjoy it, and I'll see you in, hopefully, one of my workshops, if not in the next YouTube video. All right, see you soon.